Okay, hi everyone, and welcome to today's webinar. My name's Sam Jacobs from 6 Degrees Investor Relations, and I'll be hosting this presentation from KaLiNa Power CEO Ross McLaughlin. Ross will be accompanied by KaLiNa Executive Directors Matthew Jenkins and Tim Horgan, as well as senior members of KaLiNa's technical team. Today's presentation will provide an update on the company's portfolio of power plant projects being developed to power data centres in Alberta, Canada, which is one of the world's fastest growing data centre jurisdictions. After this presentation, we're going to commence a Q&A, which will comprise both written submissions and a live question segment. A copy of the webinar will be available on KaLiNa's media channels later today, and you can download a copy of this presentation from the ASX platform as well. But for now, I'll throw it over to Ross and the team to kick things off. Ross, the floor is yours.
Well, thank you very much, Sam, and it's a pleasure to have everyone attend this webinar. We're very excited around the recent developments that are underway both in Alberta, but specifically the progress that we're making as a company and our Canadian subsidiary, KaLiNa Distributed Power, the progress that it is making these days. We'd love to have this opportunity to bring everyone up to speed. I'm particularly impressed with the fact that our registrants for this have included a number of our existing shareholders, but also notably pleased to note that we've had quite a considerable number of new investors, prospective new investors, come to join us on this webinar today. To kick things off, I think I'd like to follow the same sort of approach that we have been using to present to key strategic investors through this process. So I'd like to start this, continue that sort of approach and begin the presentation a little bit with a few words from my fellow director, Tim Horgan. Tim, if you could kick us off.
Thanks, Rob. Alex, if you could go to the corporate snapshot on slide 3. Thank you very much. Okay, the top 10 shareholders are all pretty much exclusively high net worth, and they own over 36% of our register. The top 200 own about 90% of our register, so it's a fairly tight register. My family has put in approximately $3.5 million in support of this company to date, and our CEO Ross McLaughlin has also put in approaching $1 million of his own money, and that's all cash. Every board member has put their hands in their pockets in support for significant sums in terms of what we've been trying to do and in support of the company. So there's a tremendous amount of belief there from the management team in terms of what we're trying to achieve. Thanks, Alex. If you can go to the board of directors. One of the main reasons my family has supported this company to the level that it has is because of the extremely good team that Ross McLaughlin has managed to put together over the last few years. It's a very heavyweight team in the power development space. Our chairman, Stephen White, co-founded 2 very successful power companies in Canada. Both of them sold for approximately $10 billion, so $20 billion on both of those companies. He was the CEO of one of those for many, many years, and actually acquired a company that Ross McLaughlin was on the board of about 15 years ago. That company was Pristine Power. It's a former darling of the TSX, and was acquired by Stephen White when he was chairman of Verison. The team that we will talk to shortly, that Ross will talk to shortly, many of those members have come from Pristine Power, and there's been an element of putting back together a very, very experienced and qualified band here, and they are supporting very much the board in what we're doing. Another recent acquisition to the board was Matthew Jenkins. He's the former CEO of Macquarie Capital Markets Canada, 19 years of experience. We first met Matt about a year ago when we were presenting our projects to Macquarie. He very much liked what he saw. He subsequently left Macquarie and has joined our board. He came on initially as a non-executive director, and recently transferred to becoming an executive director to reflect the amount of time he was spending on our projects with us. Peter Littlewood is the ex-2IC of China Light and Power, which is a $26 billion Hong Kong listed entity, owns Energy Australia. He was in charge of much of their project development, and has spent an enormous amount of his career developing projects in the manner that we are trying to achieve here. Malcolm Jacks is also an Australian director alongside myself. He's worked with many big entities over the years, including BP Ventures, and he's lectured at MIT. He's a qualified engineer and provides us with great technical support. Ross, if you could now go and introduce your team, that would be appreciated.
Thanks, Tim. And just, I think, to set the stage for this team, it's important to understand, I think, when you're looking at a board, that it's as accomplished as we have assembled here. And then when you start to look at the execution team, there's a couple of reasons for this. We've been planning for success all along with the engagement of a correct level of board of directors, with the skills and capabilities that it has that Tim just walked you through. But also when you start to look at the core members of our team here, many of whom came from Pristine Power, and then been augmented with additional members, which are outlined in this presentation. Our general manager in Alberta is Bob Rosine. Bob's one of those guys that when you're walking around Calgary, you better be careful what you say about whomever you need to say it, because everybody knows Bob Rosine. In the oil and gas business, he is a bit of a legend. He's been in the business for about 35 to 40 years. As he says, he came over to the dark side on the power side a few years ago and we recruited him. We saw the need to have someone with Bob's talent, not only in running businesses very successfully in the past, but also having his business contacts in the oil and gas business is very, very critical, especially given what we are doing with our gas-fired power plants with carbon capture and sequestration. And Bob's a very, very critical role, plays a very critical role with the members of our team. The former Pristine Power CFO, Jeff Krause, was also recruited just about a little over 2 years ago now, I think. And Jeff came over. He was, as I mentioned, the former CFO at Pristine Power. And Jeff is the KaLiNa Distributed Power. That's our Canadian subsidiary. He is now the CFO for that company. Again, positioning ourselves to be able to work with prospective investors, also with respect to partners in a very professional and effective way. Ken Spinner, who's not with us today because he just sent us a quick note to say he's sick as a dog in bed. But Ken Spinner is fighting the flu in Calgary tonight. But Ken Spinner was at Pristine Power as well. And Ken's role is that of EPC and project management. Ken very, very successfully been able to pull a lot of big projects together in his career. And with us today, we have Julia Consiglione, who is basically head of our regulatory and environmental affairs, a similar role that she held when she was at Pristine Power. And we're delighted that we have her skills and capabilities as part of this. I would point out that Ken and Julia, from an operational point of view, their roles are essential in the development of any project. And when anyone talks to us in our team, they really quickly understand that we have these critical roles covered. This is not something that both Ken and Julie will do all themselves. They'll do exactly as what they did when they were Pristine Power and exactly what Jeff Krause did when he was at Pristine Power, which is assemble a team that is effectively capable of deploying and developing each of these projects. If we go to our next slide, please. You know you're in the right space when you start having folks like Blackstone making public comments around what is happening in this sector. I think the reason that many of you are on this call today is because you recognize the fact that this whole explosion of artificial intelligence and the demand for power, regardless of what you hear with DeepSeek, etc., the need for the power is extraordinary. Just recently, in the last 10 days, we've heard from Microsoft, we've heard from Amazon, basically foreshadowing their concerns that the growth of AI is going to be critically dependent on access to power. We believe we're in the right space at the right time. Next slide, please. And of course, this is why we're here today to talk to you about, and a lot of material to cover as we're going to walk you through this presentation and hopefully answer any of your questions at the end. But we're here really because of a couple of key things. We just recently announced, after months and months of negotiation, a framework agreement that we've announced with Crusoe. And this has expanded considerably since we announced the MOU with them in August. And effectively is to jointly develop AI-focused data centers that are co-sited with KDP's power CCS plants, our power plants which use and incorporate carbon capture and sequestration. It's anticipated, just so everyone's very clear right now, don't want anyone confusing, that we're not going to own any of their projects and they're not owning right now any of our projects. It anticipates Crusoe to own and operate its data centers, contracting for the power for those from our owned and operated power CCS plants. That's the business model for each of these. There's a lot that goes into jointly developing these projects. There's a lot of issues that have to be sorted out and dealt with. That's what the framework agreement sets up. But the end result is that they will be set up to own and operate their plants, and we will be set up to own and operate our plants, joined via our contracting methodology with between the two parties. Now, this anticipates the development of agreements for long-term tolling power purchase agreements, which will be a minimum of 15 years. And what's significant about that, and you'll hear more about how these are de-risked from a commodities point of view, et cetera, from our perspective, it will provide KDP with projects that'll have long-term stable cash flows. And we know that that's important to get corporate financing away and done. It also includes provisions for funding by Crusoe of certain of our electrical and gas supply interconnections and security payments for each related project that they do. Now, bringing all this together right now in terms of what it is we've accomplished, we've already spoken about our team. You're going to hear more in a few minutes. I'm not going to steal the thunder here about Alberta, but you need to know Alberta has become right at the forefront of AI data center activity. And I'll just make one comment without getting into all these comments or these points which are there. You should note there aren't a lot of places in the world, certainly in North America, where the grid can support the development of AI data centers and the explosion that will be required for the power assets that will be necessary. But we're doing our projects at a certain scale, which we'll talk about, which allows data centers to develop and incrementalize their business and grow their business in Alberta with our projects. Currently today, we have secured 5 strategic sites. If we were to just go out and build power plants on those without even consideration of data centers, we'd have the capacity of building out 1.7 gigawatts of power. That's a number that certainly gets the attention of almost every data center company out there. So that's why that's one of the key reasons why, of course, Crusoe is looking at us, and other data center companies are looking at some of the other sites that we have that might be available for them to look at as well. And the key thing I want to let people understand is our investment strategy, and I'll just very, very quickly cover this right here. This development strategy is, as a project developer, just like at Pristine Power, we develop the projects through the pre-feed stage and the feed stage, and then arrange the funding at construction. That's at the FID stage. And hopefully, trusting that we will do it like we've done before, each stage is progressively done at higher valuations, basically to take advantage of the fact that the project gets progressively de-risked. And when people ask, this is a fair question, how does a company fund all of this? The notion here, which has just changed a little bit with the recent activity that's been going on, is we'll be looking at either the sale of 1 or 2 of our projects that may be the source of capital, or there'll be an investment coming through at the project level stage, which we're actively discussing with parties on now. Or it could be that investment will come in at the KDP investment level, etc. So each of these will be taken into account to maximize the accretive nature of the investments. And then the sale of each project is the ultimate goal at the end of the day. After these projects are up and running, effectively we'll be looking to have an exit strategy where we sell projects which are fully done, constructed, and operating, and then we look to have a very significant uplift as a result of that. If we go to the next slide here, please. Now, this will give you an idea of what a project overview is when we have an AI data center co-sited with a KDP Power CCS plant. And I'll just ask maybe if I could ask Bob Rosine to say a few words here about how this is set up, both from a process point of view and also from a contractual point of view. Bob, if you could say a few words here.
Sure. Thanks, Russ. So what we're dealing with here on all our co-sited projects are we're using technologies that are known, proven commercial technologies. The CC unit being the combined cycle turbine, the PCC unit, which is post-combustion carbon capture, which is amine is used as the fluid for the capture. It's been used for decades in oil and gas, and it's basically the same version we're using here with our CC unit. And then the data center technology, it's been evolving all along. It's moving very quickly. Now, most of the people coming to Alberta are hyperscalers. There's some Bitcoin people, but it's a real cross section. So the idea is to co-site this data center on the same land sites with our CC unit and PCC units. And just to give you a flavor of what's happening here, so we take natural gas basically off the pipeline from a provincial and federal delivery system called NGTL. And it's about 36,000 GJs a day. And some of you like British units, that's about 34.5 million cubic feet a day. We take those molecules, we combust them through a turbine, and off the turbine comes exhaust gas, steam, and electricity. And so the electricity will be used by the data center. Excess electricity will go to the Alberta grid for being sold into the Alberta power pool. The steam and electricity and exhaust gas runs through the PCC unit, where that exhaust gas we capture up to 95% of the CO2. That CO2 is then pumped down in dense phase form into an Alberta government carbon sequestration hub. These reservoirs are some 3,000 meters below the surface with the right geology to store it forever. So that's where 95% of it goes. 5% goes up the stack. And we use some of the steam and the electricity to generate to regenerate the amine to start it all over again. So it's one big continuous cycle. And the data center, the appeal for them obviously is a long-term PPA where they're not subject to the vagaries of the grid by themselves. They've got a long-term source of power with KaLiNa distributed power on our Power CCS projects. Go ahead, Ross.
Thanks, Bob. A couple of other pieces for you to all note is that all of our projects are going to be approximately 170 megawatts in size of power being generated for the data center or excess power being sold to the grid. That's going to be a standardized design that we use with we have a competitive bidding process underway right now with the major suppliers and major vendors. But it'll be a standard design that we can design it once with the views of repeating it over and over and over again. For those that didn't pick up on this, just to make it very clear, what's pretty exciting about this with the post-combustion carbon capture unit, that technology comes from major companies such as the Mitsubishis of the world or the Fluors of the world, the Lindes of the world. These are major companies that can provide performance guarantees. They've all indicated capture rates of 95% of the CO2. Significant. And for those that have also missed this in the pitch, just to make sure that it is very, very clear, and there's a race for this right now, for us to basically get these projects deployed quickly, rapidly, because there is these major funding incentives. These are cash back incentives that are available, representing 37% of the total CapEx. Our CapEx number for each of these projects is roughly $1 billion. Yes, $1 billion, and that's a lot of money. But so too is the cash back of about 37%. That means each of these projects is going to cost a net of around $650 million. The contracted model, as we just mentioned, will be these long-term power purchase agreements, de-risked approach in order to make sure that we can get and secure project funding. To the next slide, please. There's a lot of detail goes into this, but I should point out that if you get a chance to read this, and you just will see what is involved with each different site. And please recognize that there's some commentary here that when we talk about the capacity of each site, you have to understand it takes into account several factors. It was how much usable land do you have? What available natural gas is there? And also what is the what is the capacity of the wires with the transmission system likely to be able to support? So when you take all of those factors into account, you may see some variations that say, well, why did this project handle this much capacity and it's only twice the amount of acreage? There's different reasons for that, but there's a very detailed slide here. But the key piece to this slide is to show where our sites are located. We're located in the heartland of where the activity is for electricity demand and where we know that the data centers will want to be located, because it represents the opportunity to go after sites that we've secured, basically to satisfy where we believe the demand is most likely to be manifesting itself. Bob, could you speak for a few minutes around, as you call it, your famous Venn diagrams? Because I think a lot of people need to understand that these sites, while there's lots of locations in Alberta to do some of these things, it's hard to get them all lined up.
Right. Thanks, Ross. Just to give everybody a sense of distance or scale here, Calgary, Edmonton, that's about a 300-kilometer drive, a little over potentially. So right in the heart of our projects here, we're in central Alberta to south central Alberta with 4 out of the 5 projects, one in Grand Prairie. But as we call it, basically the overlap of 3 Venn diagrams is how we pick all these yellow sites circled with the red here. And those Venn diagrams go like this. There's the electrical interconnection. You need strong electrical interconnection, usually 240 volt high capacity power lines. Lots of times it's multiple circuits. We have some with 3 circuits, some with 2 circuits, and one with 1 circuit. Grand Prairie has a little less capability by itself on a standalone basis, but still the need is there for more power and some let's call them lighter scaled data centers. So the other piece of the Venn diagram is access to natural gas supply. You need natural gas supply for your turbines, and it has to be for a long term. Just like when we're setting up these PPAs, we need long-term PPAs and we need long-term natural gas supply. The other Venn diagram that overlaps with them is the carbon sequestration hubs. And there's multiple hubs in Alberta, 24, 25 of them. Right now, a lot of our properties are right next to or on top of these hubs, or access to CO2 pipelines in the area. So where those 3 Venn diagrams overlap, that's how all these sites are picked. So these are 5 that we've got lands under control. The majority of them are options to purchase at our option, so we can lock them down whenever we're ready to go. Go ahead, Ross.
Thanks, Bob. If we could leave that slide up for a second, Sam, I just want to bring everybody into this next section, which we're going to cover, which is, if you look at these projects here, the framework agreement with Crusoe covers the Myers Energy Center, the Crossfield Energy Center, and the Alsike project. You'll note that Claremont, which is there, and Gilby, which is there. Gilby is on leased land, which does not fit the criteria for Crusoe, so that is not part of the framework agreement, and nor is Claremont, because we wish to keep something out of the agreement with Crusoe for now. And we are looking quite clearly at the consideration of whether or not Claremont and Gilby should be sold. We're looking at that, but we're also looking at developing those in conjunction with others that have their eyes on those projects as well. So we'll get to that in a few moments, but I just wanted to make sure as we go to the next slide, which is the framework agreement, let's go there now, that we are understanding that the framework agreement embodies right now, currently, the first 3 projects that I just mentioned there with Crusoe. We've already covered some of those other highlights in the previous discussion, summarizing what the framework agreement embodies, but also just want to be very, very clear that the strength of this project development agreement, which will be done for each specific project, it will include indicative terms for the long-term power purchase agreements initially, and those long-term power agreements will then be put into final legal form once the feed stage work has been done and all the numbers have been completely verified down to the final sort of penny, as it were, per megawatt. And that's what we have to work towards doing. But the initial PDAs have to be initiated and done in a relatively short period of time with Crusoe in order to keep their feet to the fire to make sure that we're getting along with these projects in a commercially reasonable time frame. And the provisions for the funding by Crusoe also include what will work out to be approximately $9.5 to $9.8 million per project in contributions from them for the electrical interconnection and gas supply interconnection security payments. Just keep that in mind as we go through this. And there are commercial reasonable efforts underway to get the initial project development agreement done. And I can tell you right now, our teams are working very closely to advancing the legal agreements with respect to that. The other part of this deal, which I'll just quickly cover for future growth, means that once we have made progress with Crusoe on the initial 3 projects, then we'll be looking at the potential for additional rights for them to develop projects themselves in Alberta and bring us along, and for us to be able to develop additional projects in Alberta and bring them along. So it opens the door for a broader and more expansive relationship beyond these first 3 projects. And it also provides an opportunity for Crusoe. If we end up developing, let's say we develop Gilby on our own, and let's say we do that with a gas producer, for example, and because that's kind of one of the ways it's currently set up to do. If we do one of our other projects that way, and it is not co-sited with another data center company, then we can end up going to Crusoe and saying, would you like to contract for that power under the form of a virtual power purchase agreement? So it's expanded from where it was back in August. And it is much more comprehensive today. And one of the reasons that we've acquired the additional lands and expanded the nature of our overall footprint in Alberta is frankly to address their objectives, which is to see them achieve scale more rapidly than otherwise was contemplated. If we go to the next slide, please. Now, I'd like Matt Jenkins to talk to this because this is very important and an area that he understands very, very well. And Matt, if you could talk about why Alberta is becoming one of the world's top data center destinations, and it'd be helpful for everyone to hear from you.
Sure. Thanks very much, Ross. Yeah, so as Ross was saying, Alberta is one of the world's top data center destinations at this point in time. And we'll go through a number of the reasons why that is. One, we've got a very friendly government that's into attracting industrial load. The Alberta grid is very familiar with industrial load due to the large number of refineries, petrochemical facilities, as well as upstream oil and gas operations, which rely upon on the Alberta grid. And as of right now, that the Alberta government is targeting about $100 billion or more of investment over the next 5 years, and welcoming that through various trade missions, et cetera. As of last month, there are 6.4 gigawatts currently of incremental load-only grid applications for these data centers. It does not include our projects in the co-sited ones right now, but this is just what will be actually taking off the grid. Why are data centers interested in coming here? Well, the cold climate, as it's about minus 30 tonight in Alberta, is ideal there, and relatively moderate summers as well. Peak cooling demand loads are about 20 to 40% less than you'd see stateside or further south or in other jurisdictions in the world. With the large industrial workforce we have in the upstream industry, we have a highly skilled workforce, as well as a lot of the critical infrastructure that's necessary here. Ross walked through this in just the site overview and where these are cited with the Venn diagrams. But that access to critical infrastructure, including the electrical transmission, natural gas pipelines, as well as the low latency fiber optic networks, all exist in and around the sites that we've selected. This is currently the lowest or one of the lowest major natural gas production hubs in North America. It's an extremely liquid gas market. There's about 17 billion cubic feet per day that, generally all trying to exit the province. The local demand is nowhere near that. And certainly there's a lot of room for more domestic consumption of that natural gas as well. There's significant CO2 capture and sequestration infrastructure within the province. Alberta is actually home to the longest CO2 pipeline in the world, the Alberta Carbon Trunk Line. which was constructed, and the government a number of years ago set up those 24 sites that Bob mentioned as well, and those have been piloted and being tested and entering an economic phase now. The regulatory environment, as we mentioned, is very supportive of this. There's strong incentives and a streamlined approval process to get that done. And then just about the actual Alberta electricity market itself, even before data centers, this was still a great place where you could build projects. Alberta deregulated its energy markets about 29 years ago. So it's a competitive energy only market, meaning it's similar to ERCOT in Texas, which makes it unique in Canada. For that reason, that makes it a merchant market as well. So folks coming in don't contract with the government. They need to rely upon the actual pool price, or go out and strike these industrial deals in terms of industrial PPAs, such as we're attempting to do with Crusoe. Just some of the facts here, so you can triangulate that 6.4 gigawatts that's coming on the market here. But in 2024, the average provincial load was about 10.1 gigawatts. We had a record load of 12.4 gigawatts. And by the way, last year in both summer and winter, we hit new records for load. And, that's even before the significant data center demand is approaching here. The dispatchable generation capacity is about 15.6 gigawatts. And then there's an additional 7.5 gigawatts of intermittent renewables, which has come in, which is not just dispatchable. And we're also quite poorly connected with neighboring power grids. That means that the Alberta power grid really needs to stand on its own. And with all this load coming in, there is a desperate need to get additional gas-fired firm power built in this province. That also needs to be affordable. So that really is where the natural gas-fired power is coming in, and there's significant incentive to build those. And additionally, Alberta is also now experiencing the highest population growth rate in Canada, so about 4% per year. And these new highs that keep recurring. So again, why would data centers want to enter this market? Just to wrap up, because it is a deregulated market, there is an opportunity to go out for project proponents such as ourselves to work with groups like Crusoe, and we actually can fall through a very fair regulatory system and follow through to have these constructed. We're sitting on top of significant amounts of natural gas with highly commercial parties and credit-worthy counterparties on that front. We do have existing capacity and processes in place to increase the transmission and generation of this electrical power.
Thanks, Matt. And I think Matt has set the stage nicely for why a lot of data center activity is taking place in Alberta. And what is manifested as a result, go to the next slide, please, is to be putting us in a position where we will be able to see opportunities for us to explore various transactions that are underway in Alberta. So Matt, why don't you just speak about some of this recent sales, third-party sales activity, of several of which we are quite familiar with.
Thanks, Ross. The first one we'll talk about is an entity called Cactus Energy. So it was a subsidiary of Calgary-based asset manager and fund called BTG Energy. They recently announced the sale for $27 million of their site, which currently it's in southern Alberta. And they have near-term plans to energize about 130 megawatts and to co-locate with their partner, which is a NASDAQ-listed entity there. So that 27 million for roughly 130 megawatts of near-term gas-fired power was one metric there. Additionally, this is only a couple of weeks ago, an entity called Bitgear Technologies, another NASDAQ, and this is a multi-billion-dollar market cap company, came in and purchased a site which has permitted for about 101 megawatts, albeit on a little bit smaller footprint of land than what we've amassed within KDP. And that transaction value was $21.7 million. Again, in each of these instances, there's currently no power being generated on these sites today. So these are all development stage projects, which these two technology corps out of the US have come in to actually purchase and then complete development so that they may both have either Bitcoin mining or else hyperscale AI data centers there as well. There's certainly, we've been very plugged into this market and staying on top of it and speaking with some specialized local knowledge on this and some brokers. And just in terms of discussing sort of who the players are, and there's at any time, there's probably about, a dozen of these players sort of looking around and evaluating sites. And we're certainly speaking with some of the brokers on a regular basis of some of these transactions that are happening privately as well, because there are some others. And I think just to wrap this slide up as well, just given our connections across both the upstream industry, the power industry, as well as getting into a bunch of the data center conversations, we think that the sites that the KaLiNa has built actually do fit a lot of these things with that Venn diagram. These are highly attractive sites, and that with the usable acreage we have, the approved interconnections, the gas infrastructure, as well as the favorable regulatory processes, we do expect that this transaction velocity to continue throughout this year.
Thanks, Matt. And Sam, if we go to the next slide, please. I thought we would put this slide together for everyone to understand when our team has done over 20 gigawatts of projects worldwide, that's around the world. Understand that when we've done that, and we specifically can look to Pristine Power as an example, as a project developer in Canada and its success. We're not making up a new concept here. We're just simply following what's already been shown to be a proven model for project developers. And the investment strategy, just to be very clear, we've said some of this before, is to develop the projects through pre-feed and feed, with basically financing at each stage at progressively higher valuations as the projects become de-risked. That's kind of the model that a project developer wants to follow. And when you do your contracting, the way we're talking about these offtake agreements, the power purchase agreements, the gas supply agreements, and all these things are put together, and you end up with the talented groups like we've got with making sure that our projects conform with the regulatory environments that Julia would lead, and with the EPCs contracting for major equipment, etc. All of that with Ken Spinner involved. You're putting these projects together in such a way that you have a lot of confidence that when you reach the end of the feed stage, you're in a position to have your project equity and project debt arranged. And certainly members of our team can speak to this, but that's frankly the easiest money in the process. The hardest money is in the pre-feed. The next hardest is in the feed. And as you go through each of these things progressively, it just gets that much, I don't want to say simple because that would be an exaggeration, but it becomes progressively easier at the higher valuations that you work through it. I think it's important to understand that if we do that, as we've done with Pristine Power, and we take a project all the way through and arrange the debt and the equity funding, and we are participating, well, then we're going to earn a development fee on each project in the range of around 5%. And we're also going to be looking to get a management fee on the plant operations. And we're also going to earn an interest on either the sale of each project or an interest on the ongoing interest in each of those projects. Now, on the other hand, it's also clear that if we end up owning that project ourselves by raising money ourselves for the equity on the projects, and it's not third parties that are coming in, then we likely won't earn a development fee because frankly, it's going to be our own project that we own. So it's a little bit of a combination and a little bit of a mix depending on the ultimate end goal of each of those exercises. But clearly one of the things we do want our shareholders to understand that when we develop a project, it is not to own it ourselves for 30 years, but rather to look for a liquidation event for ourselves to basically sell off our interest. If we're part of a larger consortium, or if we own the whole thing, is to sell that project after it's been up and running. And we look for multiples that are similar to the rest of private equity. We're looking for anywhere from 2.5 to 4 times MOIP, the amount of investment capital that goes into these projects, depending on how strong the returns are. None of that would be possible without a really effective commercial offtake strategy, which we've summarized here on this slide, but also in the discussions we've just had thus far. And it's important to understand, and we just want to reinforce it if we can. How are we going to finance this? It's either going to be investment at the KPO level, the project level, or frankly, the sale of one or more of our sites. And that's the way that we'll be able to fund our way through this. Could you go to the next slide, please? This is an area I might like to have. I was hoping to have Ken join us here, Julia, but I'm going to ask if you can help walk through some of this together with Jeff Krause, which is effectively to show that we're in the pre-feed stage right now. We'll then get into feed. Some of this overlaps just naturally, as you can appreciate. But I think the key thing that to both Julia and Jeff would want to let everyone understand is this is familiar territory to us as former members of Pristine Power, and certainly any project developer would walk through. But maybe, Julia, I could ask you to start, and maybe Jeff Krause, you can also comment as well.
Thanks, Ross. As you mentioned, for us, what's really important in the pre-feed stage is we have to look at what is the design of the facility. Do we have an appropriate site? And are there any regulatory hurdles that we need to be aware of and potentially overcome? So we focus in pre-feed really on de-risking the initial stage of the project. Once we've looked at what we have to work with on site, we do some preliminary regulatory work, environmental work. And if there's any type of community involvement that we need to be aware of, what are our major risk areas on the regulatory side, that is what we do on pre-feed. In the feed stage, this is where we really spend, I think, significant dollars in, I would say, obtaining regulatory approvals, doing detailed engineering. This is where I think each of the disciplines start to work hand in hand. We really go out to the communities. We conduct our consultation. We talk to government agencies. And that is where we submit our regulatory approvals with the goal of obtaining them. And Jeff, I don't know if you want to add anything in on the financing side.
Sure. So as Julia mentioned, in the feed stage, we're finishing off our detailed engineering such that we have the overall costs, the schedule, and those sorts of things completed. We're also finalizing our EPC agreements, our major contract agreements for the equipment, as well as our tolling agreements. This all sets the stage for us to raise the project equity as well as the project debt. So we would typically start doing that midway through the feed stage. One nuance between the pre-feed and feed for these plants and just a simple combined cycle plant is the additional engineering on the PCC unit results in the feed stage being about 5 to 6 times what the pre-feed cost is. So a little bit more on the feed stage on the engineering side. Once we hit FID, we will have the equity in place. We will have the debt commitments in place, including letter of credit facilities, quickly moving into construction immediately thereafter with a 2.5 to 3 year period for construction to get to COD. And as Ross mentioned, as we are spending money, we are making application for the incentives and receiving those incentives, in the case from the federal government, in the year after application, so as we move along, and for the Alberta incentive in the first 3 years of operations. Back to you, Ross.
Thank you very much, guys. That's good. If we go to our next slide, which I think wraps us up here, this is our summary, and it's probably time to go to our questions. But just before we do, I do want to just emphasize these key pieces here. We've reviewed with you some of the highlights of the framework agreement with Crusoe. I can't tell you how excited we are, and our teams are working extremely closely together on a number of fronts. Crusoe is a very exciting company, and just before we get into that, Matt, maybe I just ask you just to wrap up here to basically just reinforce reasons why Crusoe sort of came to the table and what they see in what we're doing.
Yeah, absolutely. I mean, for all those reasons we laid out for Alberta being attractive for them, again, the backdrop is that they're there will be high competition for electricity and connections here in the future. That's not limited to Alberta. That's happening all over North America, but they see a real opportunity to forge a partnership with us to actually build this so that they can secure those long-term agreements, and not be subject to the volatility that's going to be occurring in power markets across North America in particular, in the coming decades. With the sites that are secured, all sort of touching on all those crucial pieces, with the critical infrastructure being there, and then having a team that can actually go out and execute, to put these projects together and to sell them off as long-term infrastructure is really what KaLiNa has been hard at work, and what I think we're well on the path to achieving.
Sam, if I could turn it over to you for the Q&A session.
Yeah, thanks, Ross, and the team there for that presentation. We'll turn to the Q&A now. Certainly got a lot of investor interest so far, so there's quite an extensive questions list. We'll sort of frame it in sections here, but just kicking off on this Crusoe agreement. So obviously the framework agreement with Crusoe is an advancement on that previous MOU that the parties signed last August. And perhaps this is sort of a combination of a few questions that have come in, but for Aussie investors who are less familiar with the company, Crusoe is quite a big established data center specialist. They recently closed a large funding round. I think it was US $600 million at a US $2.8 billion valuation. They've got some big projects in the US as well. So as this co-development advances, can you talk, Ross, or someone from the team, about what you think attracted Crusoe to a power provider like KaLiNa at this stage?
Yeah, let me take a quick stab at this, then I'm going to ask Matt to further elaborate, because I think this is important to understand. Commercially speaking, one of the things which I believe Crusoe looks at us and says, they see a nimble, highly effective company such as ourselves, very entrepreneurial, and it kind of reminds them of themselves just a few years ago, and they see that synergy. They also have been working with our teams and see an awful lot of synergies with our team in terms of how we all seem to get along and how we seem to think of things, and that's you can't deny that kind of chemistry that's there. That is definitely there. But one of the things which struck me is when I look at how they just completed this 200 megawatt project with Oracle down in Texas. When they did that, they've started construction of it. And when they did, that was the largest data center project going to be in mind. But now it's already being eclipsed because everyone's talking about needing to see visibility on projects that they can do for over a gigawatt. So with us, they see the opportunity to get to a gigawatt, but they don't see the requirement to fully invest to have to achieve a gigawatt overnight. And that way they can build their order book to meet the capacity requirements. So those are a couple of the things that are there. But Matt, do you have anything else you would add to that? Maybe even let some of these people that are on the webinar understand who the heck Crusoe is, and maybe a little bit about their recent financing and their investors.
Yeah, certainly. I mean, one thing that attracts Crusoe to Alberta certainly is the fact that we do have well-defined reservoir for carbon capture. They've certainly recognized they have been a clean focused or renewable focused in their previous iterations for the pre-AI data centers, but just the regular data centers. They had done a lot of renewable work, and they want to sort of clean up that space because they do recognize the intense power loads that it requires. So, when you hang around the various conferences in North America, you discover fairly quickly that Alberta has both the gas supply as well as the carbon capture and sequestration reservoirs necessary for this. That's definitely one thing that attracted them. Another one of their projects over the years had been a methane capture. So they're basically taking flared natural gas and turning that into their own power for these data centers as well. So they're very familiar with the natural gas complex in North America for that reason, because in the past they scouted a number of sites for that application. Flash forward to today, they were an early mover on partnering with NVIDIA, who actually in the $600 million round, which is their Series D round. NVIDIA is an investor there. But the lead investor is actually the Founders Group, which is led by Peter Thiel. Other investors include Ribbit, as well as Journey Venture Capital and Valor as well. All of these entities are highly successful VCs in the Silicon Valley area. So investments across SpaceX, Uber, the Mag 7. They're deeply connected, and I think as they were attracted to us for our ability to deliver these centers in Alberta, we're also really attracted to them just for all the connections they bring, and our belief that they'll be one of the best names to partner with, because they're going to identify the best tenants for their services as well that we can partner with.
Yeah, thanks, Matt and Ross there. So perhaps just following on from that, having signed the framework agreement, is there some high-level insight you can provide just on how the teams from KaLiNa and Crusoe are working together at this moment in time? Any near-term objectives, or just how that partnership is progressing?
Yeah, sure. I mean, I'll also ask Bob to maybe further comment on what I'm just about to say, but our teams are, some weeks we're in daily contact with them, and other weeks we're in contact with them at least, 2 or 3 times a week. And it ranges everywhere from coordination of information that they need on the Alberta regulatory market environment, et cetera. They're doing a lot of their land due diligence in the process of doing that right now, even some government grants and applications. But more broadly speaking, it's just the level of engagement is covering a broad set of criteria. But the most important thing that we're working on, of course, is getting the elements of the project development agreement, which, by the way, we've already spent a lot of time on, but we're trying to get those elements all finalized and formalized so that we have our initial draft of that ready to apply to the first project. Bob, do you have anything else you'd like to add on that in terms of how our teams are getting along?
Yeah, just to add to what Ross said there, the devil's in the detail, and we're happy to provide that. Like on AESO electrical filings, Alberta Electric System Operator filings that are both co-sited joint load and generation. And as Ross said, environmental and land documents, we keep them up to speed on what's been done environmentally and what remains to be done. And on the land documents, take them through in great detail the types of options to purchase that we have there, right through to taking them out to field trips and keeping them apprised of developments in the regulatory world. It's, as Ross said, it can be daily, and then there's times it's once or twice a week.
Bob, is it fair to say we're even assisting them with respect to, I think, some government applications for funding for data centers? Is that not correct?
Yeah, through the federal government. Yeah. I think it was.
Yeah.
French.
Okay, Sam?
Yeah, thank you there, Bob and Ross. Perhaps just following on from that, staying with this Crusoe agreement, but another question came in. Do you think that improvement in the KaLiNa balance sheet is a necessary precursor to signing the project development agreement with Crusoe?
No, it can't help. It can't but help, right? Clearly, what they want to make sure is they want to make sure that we can pay our fair share of what we need to spend on these projects. They're putting a lot of faith in us, frankly. They've looked at our team. They've looked at our history. They know that our team goes through these, I'll call them thinly funded stages as a development company. They understand that. But they are looking closely at us to make sure that we, in fact, have the ability to live up to the requirements that are going to be upon us to make sure that we get our power CCS projects through the pre-feed, through feed, with a line of sight of being able to construct these projects. Otherwise, they're spending a tremendous amount of money without that visibility. So there isn't a specific requirement that's laid out with respect to our balance sheet. They just want to know that we're able to be in a position to progressively raise capital as required through this whole process.
Yeah, that's noted. Thank you there, Ross. Next question was in connection with that power CCS. Obviously, that's a special technology of KaLiNa. Perhaps also touching on what Matt said before about Alberta as a jurisdiction for CCS as well. Can you talk a bit about how KaLiNa developed this specialty in power CCS as a low emission solution? The attendee also wrote, is this important to Crusoe, that power CCS technology? And if so, why?
Let's start with your latter part. The reason, yes, the answer is Crusoe, their clients, as Matt was mentioning, we all kind of know who they are. I mean, there's the likes of the big brand names that are out there, and all of their clients have a requirement to see that the data centers they contract with, such as Crusoe, are powered by energy which has a low carbon footprint. And it's been publicly stated in a number of documents and news releases and presentations that Crusoe has done that they are very, very actively pursuing projects with carbon capture and sequestration. I would point out to you that they've only started making those kind of comments since we have really started talking with them. It doesn't mean that they're not looking at other opportunities elsewhere, but they certainly likely are. But it's as they become more educated with what we're doing. To answer your question, to put a finer point on what you just asked, and I think it's important, you implied in your question that the CCS is something to do with our technology, and it couldn't be further from the truth. CCS is not our technology. We do not want to develop these projects with anything that's new. We want to have the CCS, which is carbon capture and sequestration, done by third parties who are vendors of those solutions. So we're talking to the world leaders, provided by Shell, provided by Mitsubishi, provided by Fluor, Linde, and a handful of others, meaning about maximum about 6 of them. And those 6 major companies are capable of providing performance guarantees with balance sheets behind them to make sure that they can do it. So we've been running a competitive bidding process with those major vendors with respect to making our final solution. And we'll make that, final selection. And we'll make that final selection once we have a better handle in a relationship with an EPC provider, which we're also running a competitive bidding process with at the same time. So please understand, carbon capture and sequestration is very important. It's essential in be able to provide guidance to a customer like Crusoe that we can provide energy or power with a low carbon footprint on it by capturing 95% of the CO2. But we don't want to be saying that's our technology. We don't want to be saying it's our guarantee. It's going to be a guarantee made by major players, major vendors.
That's noted. Thank you, Ross, for that clarification. Perhaps last question just on this Crusoe. We've had a lot of questions coming on the agreement, as you'd probably expect. But just in the interest of keeping it moving along, last question we've got is what sort of deal are we talking about for this power purchase agreement with Crusoe, do you think? The attendee set out different options like cost plus pricing or input based pricing. Is there some sort of context you can provide around that at this stage?
Yeah, I can give you a really brief description of it without getting into the details, because the details, frankly, are very confidential, but I can give you this, okay? This is important. It's really not like your typical power purchase agreement where you contract with the grid utility operator on a pricing mechanism for, say, 5, 10, 15, 20 years. It's not that sort of thing. What it is a tolling power purchase agreement. And by that, what we mean is we, meaning KaLiNa, and the ultimate owners of the power plant and CCS plant, do not want to have any commodity risk. We want to have assurances of a very steady cash flow that is a reliable cash flow. To that end, we have the toller, which is Crusoe. They will be responsible. We'll help them with this, of course, with our gas producers and relationships, but they will basically buy the natural gas, run it through our power plant, pay us a toll, which is effectively like renting the facility. And they'll pay us that's a capital charge toll. And they'll also pay for all of the operating costs of our power plant. And in return, what they'll get the use of that electricity. And they'll also get the value of the carbon credits that have gone through that they can sell back to some of these these gas producers. What that really does is it establishes a framework of their pricing that they'll be able to look at over the next 15 to 30 years. And we established that, and we did that up front in the process, very much up front in the process, to make sure that our pricing range fit with their expectations for affordable electricity. And that's about as much as we can say at this time.
That's noted. Thank you there, Ross. Perhaps next, a question for Matt Jenkins, if we can, just before we move on to the rest of the questions on project development. But Matt, you recently transitioned to exec director at KaLiNa in November 24 after joining the board last May. So, just with your career experience in North American energy capital markets, can I ask what attracted you to join KaLiNa at this time and then subsequently take a more active role in the company's development strategy?
Yeah, certainly. Yeah, and Ross had touched on it too. I'd met the team back while I was still at Macquarie and really liked all the projects. I was part of, at Macquarie, co-developed the most recent largest natural gas facility in Alberta, the Cascade Power Plant, along with the Canadian pension, and got really interested in this and started to see a lot of the same characteristics emerging in the market. And this is even almost, before the big hyperscaler data centers, and really just wanted to get back in the space. And I do see it, as a generational investment opportunity for these types of facilities. And just given the experience of the team and the rapport we developed, it didn't take too much convincing for me to step up my role here, because I'm working hard at it and feel really strongly that this is represents a big wave coming in energy infrastructure.
Sure thing. Yeah, thank you there from Matt. Turning back to project development, obviously touched on during the presentation, the acquisition of strategic sites as part of this development strategy. Can Ross or one of the team, can you discuss the process for securing the sites in a bit more detail, and perhaps how they provide KaLiNa with a competitive advantage for this development strategy?
Yeah, I'm going to ask Bob Racine maybe to comment a little bit about this, Bob, if you don't mind. I know you've already covered the Venn diagrams and the nature of that, but perhaps also just how we actually go out there and then contract to get these sites and what's involved with that.
Yeah, so we touched on the Venn diagrams, so that's all true. And these 5 projects and more projects would fall under this down the road. But right away, you're into using your land contacts to get in touch with the owners. A lot of the sites that we have, actually, every one of them is privately owned. It's freehold. We have one that's Saddle Hills, that's Crown lease. But the secret sauce is really that making contact with the landowner early and being very clear what your intent is and laying out the project in very clear terms, timelines, being in touch with the county. So it's a lot of consultation early on, even before you can get a deal signed up. So that's really what it takes to get these done. Go ahead, Ross.
No, it's great, Bob. Thank you.
Yeah, thank you there, Bob. So just moving on, perhaps from that site acquisition, well, in connection with industry M&A activity that we've seen, recent company announcement reference sales activity for data center sites co-located with power plants provides a meaningful benchmark opportunity for the company to crystallize value for the KDP portfolio. Can you explain what this means and what you'd use the proceeds for if a sale did go through?
Yes, and let's be sure that we don't get too far ahead of ourselves. The first part of this is this, which is as everyone would appreciate. How do you establish a value for a company today? And based upon the projected earnings and the business model, et cetera, one can do their own discounts and figure all sorts of math out to try and come up with some sense of what our business and our business proposition is worth today. We think it's worth quite a bit. But it's difficult to look for a tangible example until you just look at these recent transactions. And this is one of the reasons why we're so darn excited. because it doesn't take too long to start realizing, hey, there is some inherent value here in each of the projects that we have in today's current state of development. Of the 5 projects, 3 of them are nicely into getting well through the pre-feed stage, and the other 2 will quickly catch up. And we're in a situation where we can take our current stage of development, contrast that with the stage of development of some of these recent transactions, and we can feel pretty optimistic that there is some value that is a very tangible value that we will want to explore to better understand. And when we understand that value, be in a position to say, okay, what are we going to do with that? Now, some of our financial investors will say, including many of us on our management team, will say the best thing for us to do is hurry up and get 1 or more of these projects sold. But we'll be careful as we do that, because the board will want to make sure before we do sell a project that we understand whether or not there's other funding that's available right now. And if there is at a reasonable price, we'll consider into that trade-off as to whether or not we should sell that project or look at funding the further development of those projects to take them through to ever-increasing valuations. Bottom line is we are very excited over the prospects of being able to get our hands on more cash in a very accretive fashion, provided those values manifest themselves and are realizable. But we're very excited about that. And that would be the first time that any investor looking at what we're doing right now would be able to sit there and say, hey, wow, if you've got a real offer for one of these things, what does that imply the rest of the portfolio is worth today?
Yeah, thank you there, Ross. Perhaps there's quite a few questions and interest in kind of broader M&A and industry consolidation in this sector. So just one more question, but we had an attendee ask, if you look at this sales activity that's going on, who are most of these buyers? Where are they from? And do you see any consolidation activity or opportunities with similar companies to KaLiNa in Alberta potentially?
I'm going to ask some of the others to join in this, but I will say right now, we do not see, or we're not looking at any consolidation opportunities that we are seeing. That doesn't mean consolidation opportunities may not surface in the future, but right now there aren't any that we are looking at or seeing. But also I would say, and Bob, maybe you can reinforce this one way or the other, because maybe you can talk about the work that we're doing with Invest Alberta activity, but we are seeing, interestingly enough, a number of investors coming out of the United States in this AI data center sector, but we are also seeing others out of Asia and Europe. Bob?
Yeah, and on how we're meeting some of these people, some of these companies is through an organization called Invest Alberta. Virtually any business in AI data centers is no different. They all come to the province. They want to meet with the politicals that are in power at the time, and Invest Alberta acts as a conduit even for matchmaking between what these people want to achieve, and then on the other side, like us, where we're a generator of power, and they can do some nice introductions, and that's happening as we talk. Go ahead, Ross.
Thanks, Bob.
Yeah, thanks, guys. So just on the site acquisition strategy, turning to a slightly more technical question, just with the Myers land site, one attendee asked, so it's 65 acres. Can that site hold 2 generator/carbon capture storage complexes at around 340 net megawatts and roughly 309 megawatts of Crusoe campuses? Is there a good workaround also if the company can't get the expected extra land at Myers?
Yeah, I'm going to ask Bob to give us a little bit of the details on that. The first part I will quickly say is Myers is a viable project, even with the land we have, but why we're looking for more, Bob, I'll let you explain.
Yeah, so just to add to what Ross said there, right now you could put in 1 power generation and 1 data center across the 65 acres. We're trying to pick up another 280 acres right now that complements those lands dramatically. Actually, they're touching each other. So that will be great. We're just, waiting on the landowner. People have been away on vacation. As Ross said, it's minus 30 here and it's warmer in Hawaii, and that's where they are. So we're continuing to chase that one down. There's also other lands along those 240 kV circuits And that's why, the Venn diagram concept works, whereas it's almost a strategy of, instead of pipeline site layout, you're doing grid 240 kV line layouts for sites. But, you do want more land to have a better build out. And this is private land again. So we'll see here over the next 2 months.
Noted. Thank you for that. Yeah, Bob, that's interesting, useful context there. Just had a question come in. It's more of a general question, I think, for the KaLiNa technical team. But one attendee wrote, broadly, KaLiNa's technical team have built out 20,000 megawatts of power plants across North America. It'd be good if they could explain, with all that experience, why they think KDP can build and operate these planned projects in Alberta.
Just very quickly, I pointed out in the presentation that 20 gigawatts is not our Alberta team, but rather our collective team around the world, that we've done projects around the world with our board, Peter Littlewood and others, etc. So that's a clarification there. But I would ask, I was going to ask Ken to also participate in this, but maybe I could ask Julia and also Jeff Krause to elaborate a little bit about how we would look at these projects, given our experience of Pristine Power and other locations, how we would look at ramping up to basically make sure that we can successfully build these projects. And I know that, Jeff, you can comment on Pristine's success of being under budget most of the time and making sure our projects are on time as well. Julia, do you want to kick that? Yeah, Julia, you want to kick that off?
You bet. I think Ross had said earlier, this team is very similar to the team that we had at Pristine. We are our nimble team. We're a smaller team. I think the idea was to replicate what we did at Pristine with KDP. We often competed with larger companies that had a greater number of people working for them and also a larger balance sheet. But we took a different approach. We decided to be a lot more surgical about how we went after projects. I think being a small team also allowed us to be very collaborative when we went in and took a look at how would we not only develop, but execute the project. You're talking directly to the VP of Engineering, you're talking directly to the VP of Regulatory. And I think there's a lot of efficiencies there and a lot of good that comes of it. And I think that's the idea with KDP.
I think a few other points is that through the experience of Pristine, we actually know how to build, develop, and finance power plants. We know the pieces that you have to put in place to finance a power plant. Things like EPC wraps, things like proven technology, putting in place the appropriate processes and controls to make sure that you are spending appropriately, contracting appropriately, all those sorts of things. And as Ross mentioned, the projects that we put together at Pristine were on time and on budget, in some cases below budget, which is highly unusual for power companies. And I think that's a testament to the skills and capabilities of the team. I think the last piece is all of us have a network of individuals that we know to bring in when we need to bring in, such that we can drive the projects through to fruition.
And Jeff, I'll add on that last project that I think we did as the Pristine team over at Verison. It was a 400 megawatt gas-fired plant, and I believe we came in at least 40 million under budget. I'm not saying that might happen here, that may. But I think you have a team of individuals that know what to look for when they're going through any phase, whether it's development, construction, or operations.
And I'm going to hold them both personally responsible for that. That's great. Thanks, guys. That's very good.
Yeah, thanks, Ross, and Julia and Jeff there as well. We've had also quite a few questions on KaLiNa's existing Saddle Hills asset. Perhaps before we turn to that, just had a question come through from probably represents a lot of investors who want to see that share price climbing, but this attendee has just written in, given the share price versus a potential breakup price from the sale of all these sites, do you think the company would consider seeking a takeover? Or if not, can the company put forward some rationales to really try and generate better returns for shareholders at this juncture?
You know what? We've got a lawyer on the file here, Tim Morgan. So I'm going to ask Tim to comment on that first, and then maybe Matt, using your investment banking background, you could also comment further. But Tim, why don't you start that off?
Thanks, Ross. I think that would very much depend on the value that we might secure for all the sites, and also on what KPO's shareholders want to do after seeing those values and the recommendations of the board. A significant price for all the sites will, of course, be attractive. However, there's also significant additional value in progressing our projects for KPO, whether we use the business model that reduces our ownership down to a relatively small free carried interest, or whether we manage to maintain a higher ownership through the sale of non-core sites or through raising equity at KPO at a much higher share price. But we are in a process of seeking value for individual less core sites that could allow us to fund a significant portion of all or the majority of our pre-feed and feed engineering work on one or more of our more core sites. And that would unlock even greater value than selling at this juncture. So I guess the answer is it very much depends, and that is very much a lawyer's answer. So perhaps I'll ask Matt to see if you've got anything to add from a banking perspective.
Yeah, I think that's, much like Ross and Tim both said, we're exploring options to prove the value in this entity right now. And there have been a couple of recent markers, which we're certainly pursuing, which would help us do that. As it comes, to a full-on takeover, I mean, it's something that obviously the board would have to consider at the appropriate time. But at this point in time, we're just active in the markets and trying to create that shareholder value through the tools we have and what we can see in the current market.
Yeah, thank you, Matthew and Tim, for that. There's quite a few questions on the company's shovel-ready project at Saddle Hills as well. So we'll touch on that briefly. One investor wrote in, have the new clean energy regulations in Canada that were enacted into law had any impact on the plans for the Saddle Hills project?
Yeah, I'm going to ask Julia to comment on a little bit about this, because of everyone in our team, frankly, I think Julia can have got the most time and direct knowledge on the Saddle Hills details. But especially we've been, everybody knows we were we were caught blindsided by the clean electricity regulations being introduced just at the time when we thought we were going to get Saddle Hills away. And then found out that these clean electricity regulations came out or were pending and put a big pause on everything we had to do with Saddle Hills. And so for some time, we've been waiting for the results. But Julie, maybe you could just comment on exactly what the clean electricity regulations represent for Saddle Hills in terms of what we can currently do under the regulations, or where we're exempt from the regulations, and also this concept of what they call a planned unit.
Yeah, it's a great question. As Ross outlined, there's been a lot of consultation with industry on the clean electricity regulation, and it wasn't until the end of this past year that we really knew what it would look like. That being said, now that the regulation is out, does the CER affect Saddle Hills? And the answer is yes, it does, as currently configured. The clean electricity regulation has criteria in it. If you are greater than a 25 megawatt facility, you combust natural gas, and you are tied to an electricity system, you are subject to the CER. But that being said, there was a lot of, as I mentioned, lobbying and consultation to go into, well, what happens with those units that have spent a significant amount of time, both money resources and time, that could get caught in the CER. And so in working with Environment Canada, they came up with a concept called a planned unit that Ross had mentioned. What does that mean? it means that the CER recognizes those units that have been in flight, and that's a term that they used for a number of years to secure their viability. They have obtained permits. They have secured a site. It's literally a viable project. And so the CER did not want to have those types of projects get caught in a regulatory conundrum. So under a planned unit, certainly Saddle Hills, we do believe that it would qualify as a planned unit, which would mean you would not be subject to an emissions obligation for CO2 sequestration, if you will. But we did we wrote to the impact assessment agency, the CER, to find out if indeed we would qualify as a planned unit. We're certainly waiting to hear back. But we believe that we do, but we want to receive confirmation. Now, that being said, we have spent, a lot of time getting that site and that project ready to go. So I think, Ross, it's fair to say we do believe implicitly that there is value at Saddle Hills. It could be a 64 megawatt unit. It could be less. I think, and that's the process that we're going to go through to determine what's best for Saddle Hills.
Yeah, exactly, Julia. Thank you very much.
Yeah, thank you, Julia. And just with reference perhaps to the plan unit and the discussions with regulators that are ongoing, just another question on Saddle Hills where an attendee noted, so the recent announcement speaks of the potential sale of Saddle Hills. Julia's talked about whether it could be operated unaffected by these new CER, but it does appear, shovel ready and pretty much ready to go. Does the company see Saddle Hills potentially as a good option for a data center who are wanting to buy their own energy in this market?
We are exploring that right now, Sam. And right now the bookends are too broad, which is why we've written to the CER to confirm around the notion of a planned unit. But let me just give you what the bookends appear to be. And then Julia, if I've got this wrong, please correct me. But the way we look at it is you could go ahead and build a 22 megawatt single gas turbine that we've already kind of done all the permitting on, et cetera, et cetera. We could do that with minor amendments, and we could have a 22 megawatt gas-fired power plant up at Saddle Hills with a small data center up there co-sited with it, where we are providing the data center with all of its power requirements. That would be this would not be an AI data center. This would be more like a Bitcoin data center. So that's at the one end. The reason we could do that is because a project under 25 megawatts is not covered by the CER. So that's why we know we could do that. On the other hand, if it turns out that we can do a planned unit, perhaps we're going to do a 64 megawatt or a 60 megawatt or possibly a 40 megawatt power plant with, again, relatively speaking, minor amendments to the permits. But that would, because of the footprint that would take, it would likely mean, it doesn't say for sure, but you would likely, the bigger it gets, then you would not likely be able to have a data center there, but then you can provide a data center elsewhere in the province with a virtual power purchase agreement so that they could know that they would have the confidence in getting that power. So as Julia mentioned, we need to get the clarification from the CER so that we would then be able to then take and market to say, what would we be marketing Saddle Hills as?
Yep, that's noted.
Yep.
Yeah. Is there anything you wanted to add there, Julia?
No, I think that was well said.
Yeah, sure. Okay, moving along, we've just in the interests of time, there's quite a few questions on Saddle Hills, but we might just move. We've also got plenty of interest in the development funding pathway for KaLiNa's projects. So one question that came through, a little bit more near-term timeframe, but can we talk about how the company intends to finance KDP's operational activities over the coming year?
Yeah, I'll take a quick stab at this because in the interest of time, but and Jeff Krause, if I'm missing anything, you can certainly please elaborate. I think everyone should understand we wish to, and our desire is to advance the first three projects through pre-feed and feed and get on with that and have our other projects, the two other ones, follow suit with that. That's what we would love to do. But the number of projects that we do and the timelines in which we do them will be governed by the availability of funds which we can access. That's the key thing for shareholders to understand. We're just not going to blow ourselves up and raise a lot of money for just because we want to do it. We want to make sure we're doing this in an accretive fashion. So the number of projects and the timing it takes will then drive the amount of capital that we require to get that done. The most obvious near-term opportunity for us to pursue and consider is the likelihood of being able to crystallize, as we were saying, the value of our portfolio, of getting reasonable prices for one or more of our projects. And whether that's Saddle Hills or the Saddle Hills and Gilby or Saddle Hills, Gilby and Claremont, one or more of these projects would be one great way of doing it. But the investors should be aware, because we've alluded to this in prior news releases, and it's a truth that's a fact. The truth is our friend. We are in active discussions with a number of different investors that would either like to come in at the project level or possibly come in at the KDP level. And everyone's been waiting for the announcement to come through with Crusoe, which is now out there. And we are getting this deck out there, and we're updating our materials, and we're following up with all those different investors that we've been in discussions with across the realm. And we're going to see how much funding is available to be able to then govern how many of our projects we do and in the timeline that we're going to do them in.
Thank you there, Ross. Perhaps one more question on development funding, just with reference to recent sales in the sector. Can the board provide any rough guidance on how quickly such transactions for these sales have typically taken place? Much like a house sale, a market seems to have been set now, with recent sales providing some quantifiable guidance in this regard.
Yeah, Timmy, can you just answer that? We were talking about that earlier. You want to take on?
We understand from our discussions with brokers for those deals that many of the transactions were turned around pretty quickly. It does appear to be something of a scrum of interested parties, including data centers and Bitcoin miners, who are keen to secure well-developed and located sites in Alberta. We understand the most recent big deal transaction took 3 months to complete, whereas the Cactus Energy transaction has taken over 4 months and is still in the closing period. That's still pretty quick. So certainly with the motivated buyers, we estimate a transaction for the land could be completed pretty quickly. And then successfully doing so would be a radical transformation of our balance sheet.
I would just go on to add there, if I can, our investors simply need to see that we could end up getting term sheets or interest that we could then put our hands on our heart and say, this is the value that we see available for one or more of our projects. That to me is a significant milestone that will help it make it easier for us to raise the necessary funds that we need to do.
Yeah, noted. Thanks, Ross. And perhaps last question on funding, just in terms of raising money. One attendee talked about potential debt solutions, whether the company will be able to borrow against the value of the land of these sites, the power purchase agreement, or generational project valuation to fully complete these projects without needing extra capital. Do you think that that's a viable pathway at this stage, or is it a little bit too early to tell?
You're just listening to that question, and I really appreciate the investor asking the question. But in fairness, I'm going to restate that question, because I think what they're really saying is, I think it should be more clear that the question is whether we can borrow against the potential value of each site so that we have sufficient funds to complete all the project development funding we're doing. I think that's really the question that we're asking here. And I think the answer is it's pretty speculative at this time. It depends. I mean, it depends a lot on how much each site is worth. And if you're not selling it, can you then borrow against it? And borrowing against each site represents its own set of complications and difficulties. So to be fair, we have not yet looked at whether or not we can borrow against each site as an individual asset. Presumably, if there is enough substantive value there, then perhaps you could, but I have no idea at this stage of the game what that leverage would look like and what other additional security might be required. So I think it's a really difficult question and rather speculative to be answering at this stage of the game. But there is the potential for it, no doubt.
Yeah, a little bit too early. So I think if we look at everything that we've covered off on in terms of project development, funding, There's a lot of moving parts here. And, the manufacture of these large-scale data centers, a generational industry trend with the AI boom. There's a lot to sort of account for. So perhaps just to close out the Q&A, for investors who are perhaps new to the stock, there are a couple of tangible near-term milestones that investors should be looking out for, just sort of simple barometers that you can talk to in terms of KaLiNa's near-term development strategy.
We've been talking about this for a little while, and of course, just the recent developments that are happening. And if you took all of this presentation together and said, distill it down to some of the key things, I'm not talking about all the little things, but the key things that are there, I think it kind of summarizes itself this way. And that is, we need to investigate whether or not, and let's see if we cannot achieve the sale of one, or at least get a term sheet for the sale of one or more of our current sites. And with a valid term sheet, then understand whether or not we wish to sell it. The second one would be, we would then also need to confirm with all the other activity we have underway with respect to raising funds in various groups that are in Canada and elsewhere. We should be confirming now that we have this announcement out with Crusoe, we have this updated deck, etc., that we can be putting out there and circulating in the very near term, confirm the available pre-feed funding that can either come into at the project level and or the KDP level. And then I think the next part would be for us to also recognizing that the land value of these projects, especially at scale, seems to represent something that's very attractive. So I think securing additional lands on one or two of our current project sites and possibly another new site that we're looking at would also represent a major milestone. And then, of course, the one that is leading off this whole presentation is around executing our initial project development agreement for the first project with Crusoe. I would think that those are the first, highlighting the first four highlighted milestones that we would want to achieve. Matt, do you have anything else to add to that or any other additional commentary on that?
No, Ross, I think those are certainly the milestones that we're all working towards. But I think that just the way that KaLiNa is set up now and having a number of these different avenues where we can actually go, our sites have been well selected, which makes them valuable. The entities are well put together. The teams is there and we're ready to go. And now we have this framework agreement with Crusoe to pursue our large scale infrastructure developments here. I just think we've got all the pieces there, and we're just really hoping we can get and definitely crystallize some of that value for shareholders in the near term.
Yeah, thank you, Matt and Ross. I think that's a useful timeline for investors to follow along with there, and a good way to wrap up today's webinar. So thank you again to KaLiNa CEO Ross McLaughlin. Thank you to Tim Horgan and Matt Jenkins, exec directors, and obviously all the senior members today on KaLiNa's technical team for both the presentation and taking the time to answer the questions, because it was a really comprehensive webinar that we put together. So thanks also to our attendees and everyone who submitted questions for the Q&A. Obviously, there are a lot, so our apologies if we didn't manage to get to your question, because there was plenty of interest from the floor today. But as mentioned earlier, a recording of the webinar will be available on KaLiNa's website and social media platforms later today. Ross or the team, just before we go, do you have any final comments that you'd like to add?
Just wanted to say how much we've really appreciated getting all of our team together, or at least as many of our team that we could, to share our enthusiasm and our interest in what we're doing. And I really appreciate, Sam, the questions that individual shareholders took the time to pose to us. And with that in mind, if there are some additional questions which have not been answered, we might look to finding a way to providing an answer one way or another. I'll leave that in your capable
Yeah, that
hand.
sounds good. We can sort that out once we go offline. So yeah, look, thanks again to the team. I think that wraps things up for today. But yeah, thanks again to Ross, the KaLiNa team, and to our attendees. We'll see you next time.
Yeah.
Thank you, Sam.